All right, guys, so today is the 12th of July. This is the first take of potentially many. I've got a kiddo right there who likes to flip around now at a month and a half, and I've got a dog laying right there who likes to bark at everything that walks by. So hopefully I can do it all in one take. My goal is to make it shorter than usual. It's 88 degrees today. It's noon, and I want to get back out to the beach. So with that said, first and foremost, Avidity Fitness Challenge. We got about another, 8, 10 people this week. We only had about 5 or 6 complete it last time, which was a little frustrating, like I tweeted, just because there's such a connection with working out and trading. And, a lot of people start something and then they don't finish through with it. And I think that if you can get past those 2 or 3 first sessions, you're going to stick with it. And, there was about, like I said, I think 20 or 22 people that did the challenge where I'm donating $250 to everybody that does it up to 10,000. So I rounded up and we did 3,000 last week. But there's still more for the taking. So I want to see more people get involved. If you guys are interested, it's all on Zoom. You can use your camera if you want. Zach will comment on forum. If you don't want to, shut it off. It doesn't matter. Do your best. And really, it's just about, committing and doing the same thing over and over and holding yourself accountable, because there is such a connection with trading and accountability. And, we saw it on Friday. There was a lot of crazy action this week, but most importantly, a lot of people like to short. And we saw that on WIMI. And, you have to hold yourself accountable to stops. And if you're wrong, be wrong. Don't turn into that, old, kind of relapse into the bad, decisions that you used to make that take back a day, a week, a month, or a year in some cases for some people, right? So, I think we're going to get into that, but I think that if you guys haven't done so already, consider it. Avidity Fitness on Twitter is the handle. I'll put it in the scan, as well as Instagram. And we'll see you there. It's Tuesday, Thursday, 6 p.m., Saturday, Sunday, 9 a.m. It was 8 a.m., but we've got a lot of Pacific people now, so people are getting up and doing it. One of the biggest notes, and again, I'm going to try to condense as much as I can quickly. Oh, one thing before. I'm thinking about doing a midweek video and just kind of answer some questions. A lot of you guys throw questions in the comment section, and a lot of times I get back to the majority, if not all of them, unless it's just something that, it's a basic question that we, cover on our material. Or the free videos that we have. If it's there, then I typically don't respond, just because we have a whole free course, 8-part series, and then I think 3 into the intermediate, which has, it's loaded with free good stuff. But with that said, if you guys leave comments, as usual, you guys do a great job giving me your biggest takeaway, but feel free to leave some comments this time with, maybe your biggest question or your biggest hurdle, or something that you've kind of found to be an issue and you want to know how to get through it, or, whatever. But let's not do the basic kind of questions that the answers are right there in front of you that you can just Google or you can watch our videos. But let's take it a step further, kind of like I do at the beginning of these videos, where it's really focused on the psychological aspect, the you're kind of one step above basic, right? So I'm planning. I don't know if I'm going to do it this Wednesday. Probably either Wednesday or Thursday. I'm going to do a webinar 8 p.m. Eastern on Wednesday. But with that said, this may be the first week that I do the Q&A session. So that's just going to be rapid fire, back and forth of, see the questions, answer them. I'll probably pick 10, 15, 20 of them, depending on how much time it takes. And all you guys got to do is leave a comment in the comment section, and we'll get to them. So anyway, all right, let's talk about last week a little bit. I think one of the biggest things, at least in my trading, there was a couple days last week where, it was phenomenal all around. But there was a couple days where I was just sitting at the desk and I'm like, I know I shouldn't be sized up. I know I shouldn't be in this yet. I don't feel comfortable in this. And, anytime that you can't necessarily leave the desk, or, you can't just take a walk outside or something like that, you probably sized in too big. You're probably anticipating a trade that is not necessarily ready yet. It hasn't showed the signs, but you want it to happen. You expect it. You anticipate it to happen, but it just hasn't happened yet. So I think, ALT, ALT, and WIMI were great examples of that. More so ALT, where, and again, neither one I sized. It just was, I wasted time. I wasted time kind of, scaling in proper entries, like looking for it when I needed to use resources. I needed to watch them to make sure that they weren't squeezing on me. And because of that, I missed other opportunities. I was sized into FSLY, but then I start watching ALT and WIMI, and I missed the huge pullback on FSLY. So it was an opportunity cost of that sort, when had I just let the other ones trade, focus on those key levels that we talk about, I would have had those resources to potentially maybe hold that FSLY longer for the fade, or whatever it may be, or at least just feel better, right? So either way, I think it was pretty good. Broken record in the room on ALT about the key levels. So that was not a bad one at all. That was fine. And the same thing with WIMI. Got a great couple scalps out of it early on. Scaled into it a little bit. Covered the washes. Wrote the importance of covering the washes, and then wrote late day that key level that if it does not crack, do not overstay. This is the front side. Volume trumps all. And also, this is a market where people get complacent, right? We're used to NEO that has 100, 200, 500, 600 million shares traded. And that's kind of, I'm sure a lot of people are trading that. And then you go over to this WIMI that has, 40, 50, 80, 100 million traded. And it feels like the same, right? It's thick. It's in and out. You can trade whatever size you want. But that was just a whole fictitious feel that they gave you to feel confident about the fact that, yeah, maybe it is really thick. Nope, it's not. And it was for the 4 to 5 million float that we knew. And I always recommend make sure you use the resources that we have in Investors Underground. You can always just click the ticker and see a bunch of different sources of float. I always like to check, 3, 4, 5 different ones just to make sure that, I'm not just looking at one that might be outdated or didn't have a reverse split accounted for, things like that. So think about that kind of stuff. But either way, you guys saw, I tweeted it out, the warnings that I put in the room. So, sometimes it's not about the money that you make. Sometimes it's about the money that you saved, right? And, nobody's thinking about 15 or 20 or anything like that when it's trading at 8, 9, 10 bucks. But as you saw, I said this is the type that, it's been kind of pretending to be heavy, pretending to be thick, and they haven't really squeezed anybody yet. They haven't really turned the jets on. They haven't really flexed. And as soon as they started to flex, you saw it, $1, another $1, and then 2, 4, 5, 6, 7, 8, 9, 10. And it just went nuts. So, I'd love to get better at the long side on those, but it's just, it's difficult. It's difficult to trust that kind of stuff. There's always, you might nail a bunch of them, and then there's that one that you get, stuck in, and it just slams down. And you say, this is why I never trade these. And whatever, it would have been nice to be long, but I'm just happy to not only have not, been ran over by it, but most importantly, been able to warn. And just like I wrote on Twitter, that warning, that ability to save people from being, ran over is not free. I've paid hundreds of thousands of dollars, if not, over $1 million over the years, learning what not to do, since, I started 15, 16, 17 years ago now. So, a lot of people always say, hey, how did you know? There's just so much gut feel. There's so much tape that involve tape reading. But as I tell everybody, make sure that you you record when this kind of stuff happens. And then that way you're going to be able to, watch it back and say, right there, it should have died. It should have pulled back. It should have snapped that level. And when it doesn't, your antenna should go up. And if you're short, you should, get out or, at least be aware. So anyway, hopefully you guys were okay. I didn't really hear too many horror stories. So hopefully, it wasn't too many accounts taken. It's really about understanding, when it's easy to borrow, when it's not. There's so many different factors that come into it. And, I had a lot of PMs like, hey, how did you know? Was it because it was easy to borrow here and it had, this volume? But look, that happens all the time. It's just the way in which it acts, the way in which it traps, the way in which, it should have done certain things and it doesn't. So there's never one answer. It's always subjective. There's never a yes, no answer. There's never a, you saw it this time, so it's gonna do the same thing next time. That's the market. If we always knew, we'd all be billionaires. So, I mean, hey, maybe some of us are on our way to being billionaires, but let's take it one step at a time. Value of the scan right now. So I wanted to talk about that as well. Scan's been awesome, and typically my main watches, I've been trading my main watches every single day, which is not always the case. If you go back 6 months, usually it's stuff that I'm going to trade a little bit later on in the day, things like that, just in case the hot names of the day don't really provide. So right now, usually 2 out of the 4 top watches are my main watches. And then we have a 200-300% gainer, every single day that I definitely watch and potentially trade, but I don't necessarily force myself to trade it just because I feel like the focus, just like I talked about with alt and some of the other ones, your focus zones in on those so much and you start to fight against all the other people that are doing the same thing. So anyway, with that said, I would say that the main watches have been they're on a lock. Like they've been perfect. And it's been where my head's at. It's been where my focus, my size is, and that's been great. But even more importantly, and I tell you guys all the time to go back to the link in the description and check out the scan itself. I have a list of sometimes 10, 15 different names that I'm staying familiar with. And that's how I got eBay, that's how I got FSLY. They're not my main watches. But each morning I look, I pull it up, and I look left, I see where key levels are, I see where key breakouts are, and I set an alert. $1, $2, $3, $4 up, $1, $2, $3 down. And when it breaks the upside, I put another downside alert on. Just so they're on my radar. I don't have to use all this real estate for watching those because there's not really an edge. But when it hits those alerts, I know it's time to focus. So I caught FSLY that way. I caught Plug this week, BLDP, LVGO, and all these different things. You start to look at it, and just by setting a price alert, look at your P&L, from the trades that you were prepared for because you saw, a setup. So that's really how I've been using scans lately. Continuation plays, sometimes, people say, oh, all you do is short. No, there's a lot of longs going on. I've traded my IRA, and it's the percentage gain is awesome. It's unbelievable. I can't short my IRA, so I always have long ideas. And so we're in a very high demand market with limited supply, right? And yeah, there's unlimited supply in cases like Tops, right, or GNUS and all these trash names that just unload. But it just depends on how much supply is available at the time. So there was a period of time where there was more demand than supply was ready on GNUS. So, having the fundamental understanding of, what could happen and why it's, a zero, can get you in trouble on the short side. But for the current time period, there was only so much supply and there was a ton of demand, too much demand. A lot of fundamental shorts, shorted too soon, they got squeezed out, but now obviously you can see what's happening. It's going to go all the way back down under $1 because fundamentals in the end will win. But the game is changing. The game is changing because there is just so much demand. And most of us who have been at this for 5, 10, 15, 20 years or more, this is like a kid in a candy store type of market because, you know, there's just opportunity every single day. And if you are fighting the trend, you're doing it wrong and you're wasting time. And that's been the biggest change for me is just, you know, what used to work easily is not working. You know, it does eventually, but there's the most important piece, make that line. Make that line and tell yourself, this is when the momentum shifts. This is when the sentiment shifts. This is when it's going to come from being really, really thin to really thick and selling all pops. Watch that line. A lot of times you'll see a stock go up and stay in a channel. Don't get caught in this channel. That's why I set price alerts. I want to know when it's above. I want to know when it's below. That's where your edge is. That's what is working in this market. And just embrace it until it happens, right? Stop trying to call the top. Stop saying this doesn't make sense. Stop saying, you know, whatever. You know, did Bitcoin going up as crazy as it did make sense? Did all these altcoins make sense? No. But this is that movement 2 years ago, only in the stock market. So we just have to adapt. And it's going to be like this for the next, like I said before, I would say even longer than 6 to 12 months. I would say 18 to 24 months minimum. Because more and more people are going to make more and more money, and algos are learning new tricks, and the liquidity is insanity. So we'll see what happens. I already went over the low float, watch your size type stuff. It's very easy to get complacent in those. We're used to slugging, you know, crazy size and NEO with this kind of volume, and then all of a sudden you're trading the same kind of feel. And then all of a sudden it's like $1, $2, $3, and you know you're sized in based off of the volume it was trading, and you're like, oh boy, like what just happened? That's when you get in trouble. So anyway, even I talked to a couple people that, you know, took losses on it, but their covers were awesome. They were awesome because you want to take a day or two's loss max. You don't want to give back a week. You don't want to give it back a month in this market because it's going to cost you. It's going to cost you months and months and months of gains, right? So as long as you're keeping your losses minimal right now, there's so much opportunity for gains that you don't want to do anything to jeopardize that. And you know, I can tell you firsthand, you know, when you take a loser, you know, no matter how confident you are, no matter how good you are at bouncing back, there is that small little, you know, foot off the pedal kind of feel. And you don't want that right now. You want to be able to go for it. You want to be able to get it all. So, anyway, that was. I had a note here, like, you know, over the weekend, you know, I usually talk to traders, and just like I said last time, not really P&L talk. We don't really, you know, I made X, you made X, blah blah blah. That gets you nowhere. But strategy and key levels and all that kind of stuff. So me and Eric's conversation, like this week, was all, you know, both safe on alt. And WIMI, he didn't trade it, but you know, we were just talking about how easy it is to just wait for those levels versus, you know, all these names right now where even SPAQ is the one we were talking about. Fantastic trader, you know, flushed out. Most important part, cover into those flushes, cover into that breakdown. If you don't, you're going to get chopped up. Why? Because it still hasn't cracked the major support. So you have to make sure that you're trading around the core. You have to make sure that you are trading with an edge. So again, my other note was importance of setting price alerts, which we went over. We have those built into IU. And then last but not least, again, webinar, 8 p.m. Eastern on Wednesday. So with that said, those are the notes for the start of this scan. And what did I have for today? Dave, I always pick the hardest ones just to get better at pronouncing names. Dave Garaugius. Probably killed that name. But you've got a free month of IU or Momo Traders book, whatever one you want. Email me, webmaster@investorsunderground.com. And again, right before I get into scan, click the link in the description. You can jump on to investorsunderground.com and you can see all the words, and just so you can see, I'll move this over here, maybe this one, but you can see all the words right here. So I'm basically writing out what I'm saying. Well, I don't really read off of it, but I'm just writing out my thoughts, and then I just verbalize it. So if you guys want to read them out, go to the link in the description. So let's get right to it. PSV. PSV was difficult to do the right things. I knew it was going to squeeze up. I knew it was going to go into circuit halts. I warned everybody that that was going to happen, but I still dabbled in. And, I didn't size on the front side, but I did get the proper entries each time before it went into a circuit halt down. And typically, I'd be looking to size into that if it opens weak. This one kept on opening kind of flat, and then it trap shorts, goes up higher, trap shorts, goes up higher. So I lost some on the way up, and it was just kind of exhausting me. I said, screw it. And so then I started to get back involved in the 250 to 3 range, and I sized in pretty decently into that 3. I felt pretty confident about the 3. If I was wrong, I would have had to be wrong, but it did everything that I kind of wanted to see. And then my goal was back down to the 170s, VWAP level, because I felt like, and a lot of people ask me why, but a lot of times when you see a situation like this, if I can get this arrow, there we go. A lot of times when you see this kind of consolidation and then the squeeze, when and if it starts to pull back, you start to see it come back to that level. Not always, but that's typically where I look for potential covering spots. So anyway, it did fade off a little bit after hours, unfortunately, to the 150s. My goal would be maybe a 170, 2 push, and then look for it to fade off. Hopefully there's some good opportunities there. It had 150 million volume, so I'd love to have a second day. Maybe 2, like I said, and then, fade off. So we'll see what happens with that. WIMI, this one, like I said in the room, if you're new, and this is an exact quote, if you are new or building an account, 100% avoid. And, typically you can cut your account in half, or you can double it on these types of plays. So if you like that 50-50, then, go for it. Anyway, he's still quiet, so I am going to keep on going. WIMI, you can see, all these pullbacks, it should have cracked, should have cracked, should have cracked. 940 was the level that we talked about in the room, as well as, I think it was 880 level. So as long as that didn't crack, don't overstay. Huge move after hours. You can see very controlled. They, kind of ramp up, consolidate, squeeze, ramp up, squeeze, ramp up, and just repeat, repeat, repeat. So, yeah, obviously somebody's playing with this thing. I think there's a lot of shorts still bent. I think a lot of people try to hold over, thinking that they would get the pullback after hours, get out of their position, and then all of a sudden they turn the jets on and blew a bunch of accounts after hours. It's very easy to do so, right? If you own the float and you got a good feeling that there's a lot of shorts, now you don't have to fight with the rest of the market. You just ramp it up a few bucks after hours, and then the covers start. One by one, accounts blow up, brokers buy them in because they took on too much risk. So I'll borrow it. I'm sure it'll be expensive, but be cautious. Reminder: UONE. You guys remember that one? You guys already forgot about it probably. Look what happened after the first big crack. That was the majority of the move. It's been an amazing fader, right? So a lot of times people take it off radar. They forget about it. That's where the big money is. Not trying to find the top when you lose all your money and then you make it back. Why not just be patient and then just make? So be cautious. But I do think they squeezed out a lot of people, but it still is a relatively thin float. So I want to be super, super cautious. NIO has been great. I feel like everybody is looking for the short, which is great because, the longer it stays up, the better. Tesla's going nuts. So ideally we get some type of breakout over 1520s, squeeze up 16, 17s. I mean, that'd be ideal. But I'm thinking that if we gap into this area, I'd be looking for a fade. If we have a weak open and we kind of base at 1450s, 1460s, 1470s, then I would be looking for continuation for potential breakout. Other than that, we've got SPAQ. SPAQ, I am looking potentially for a little bit of consolidation, 1620s, and rally back red to green, maybe through 1680s. If that doesn't work, then I'd be looking for a pop maybe towards 1720s VWAP level and then fade off. I prefer to short this. I think it could be a lot like LA, I always do that, LCA, where everybody kind of got ahead of themselves. They already know the story, they're already excited about it, and then it pulls back, flushes them out, and then comes back. I could see SPAQ doing this. The deal is a little bit more exciting though, so I'd want to be cautious just because if Tesla stays hot, NIO stays hot, then this very well could stay hot. It's in the right sector at the moment, so we don't want to underestimate it. But it should be a great trader. But I'd be looking left, VWAP level 1720, 1710 area, and then again 1620s or so. So if it did flush out, you want to be ready for it because it opens up fast, flushes out fast. So if that was the case, 1480s, 1520s, something like that is where I'd be prepared for. Otherwise, we've got failed fall through momentum, CRVS. This one is a kind of a know what you own situation. We talked about that on day one. For those of you guys that don't know what that means, go back, review. Go back and look at all the know what you owns. I don't, sometimes people say, hey, how did you know? And I tell them to reverse engineer it. I'm not just going to spend time telling you exactly what to look for. That's a big edge, and if you guys care enough, you guys can review that and figure it out on your own. But if not, just by asking, I'm going to just tell you to reverse engineer it. But there was a reason why, and I, was looking to short any good pops, any failed follow through momentum. It's not always just a short sell. It's let sellers come in because we know that they're likely to sell. I want to be proven that they're going to sell. So higher the better, and continue to fade it down is the goal. eBay has been great to us the last couple of days. We're going to be very close to either a $2 or a $5 move, in my opinion. So I'd be watching for some action and ideally react to that. So we've already got a couple good points to look at. Looking left, the pop on Friday, the pop on Thursday. So any good parabolic type moves, we can go from there. And like I said, I'd love to fade it for 2 to 3, maybe $5, but if it consolidates and it starts to break out, I could see that 2 to 3 to $5 to the upside as well. So all I know is we're close to a $2 to $3 candle, in my opinion. Solo, I still am short small. I covered a majority of it when I said into the pullback there Friday. I've been swinging short since pops. Added some right over here. Added some right over here around a core that I had been trading. Pretty sizable trade. It was a comfortable trade to trade. Whatever size you really wanted to. Just slow, steady fade, which is great off everybody's radar. So I sized down just in case things get a little out of hand with Tesla and the whole EV sector over the weekend. So we'll see what happens with that. WKHS, higher the better. This one, decent support around the 15 level, but at this point, I think it's going to be the key level to watch. Ideally, pushes 15, 15, 20, and then fades off. So higher the better, looking for backside. And Hindenburg Research had put out some comments about that into the close on Friday, and if you're long, you should probably read those. Even everybody looks at when they raise the money and they look at I think it was 18 or whatever, but it's not really what it seems. And I think that people should be cautious on the long side here. I think it's just one big short squeeze, sign of the times, type of market we're in, and maybe we'll have some more good fades on this thing in the near term. Other than that, BOR. I joined this one on Friday, just a buyer in the tape, so I joined it kind of anticipating the one break. There was a bunch of volume that came in, so I started to kind of just size in a little bit and just hold it over just in case. And if we get a nice gap up, 120s, 110, 120s, 130s, possible breakout. But if it starts to fail, then I'm not looking to overhold this thing. If you're trading junk, make sure you're treating it like junk and lock in along the way. FLDM was an idea this week. Dips, if I can type it. FLDM, the daily chart, nice ABCD here and setting up. Wicks are getting bought up and looking for a breakout from there. EKSO, nice breakout again. This one had raised just a short while ago. They only did small, right? They can only raise small based on the market cap. So had some huge volume. This was 123 million shares that day. Next day was about 36 million. Consolidates, holds a higher low, breaks out. So now I want to watch dips, potential squeeze, sign of the times, the type of the market we're in. Maybe we keep on going. AAL and CCL, these are the types that can look great. They gap up and then they close at the lows, the following day. So I don't want to sit here and say I'm super bullish. I do think they gap up. I have a position on both. I just left on some of the winners. I had a great rebound trade, Paso, P Millie in the room. Made some great calls on AAL. I was already long CCL, and then I took the AAL idea. And so I just let it roll. And I sized down like 90% of it, but just in case, gaps up, then I can start to add to a winner. If it doesn't, no big deal, move on. But when this turns, very easily can go right back towards the lows. Other than that, TEDU, TEDU. I'll be watching this one. This one has a nice trend that started. Most importantly, you can see this ABCD type setup, right? So ramps up, don't know where to buy, starts to consolidate, ramps up, higher low, right? So A, B, C, higher low. Risk off of B, breakout. So I'd be looking for a very similar situation to that again on Monday. Other than that, like I said, click the description link in the description area. That goes to IU's watch list, and you'll be able to see I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 more names that I'm going to set price alerts. So, at 9 a.m., I pull up all the charts and I set price alerts, looking left, and then it'll alert me when it's time. So that's about it, guys. Again, Dave oh man, I can't get this one. Garargius, probably pronounced it differently the first time. You've either got Momo Traders or a month in the room, so make sure you email me. And again, a reminder, a webinar on Wednesday, 8 p.m. Eastern Time, as well as a request for questions, because I'm going to start to do a midweek kind of Q&A mailbag type thing. And whether or not that's this week starting or next, I don't know yet, but I'll probably start to request the questions in Sunday Scan, and then we'll answer them midweek, whether it's Wednesday or Thursday. We'll figure it out. Probably Wednesday, just because I do the Avidity Fitness Tuesday and Thursday. So that's it. And have a good rest of the weekend, and we'll catch you in the room on Monday.